My years of failed strategy has led me to this one strategy the banks use daily to win every trade. Please forget every strategy out there. This is the only one you need if you follow exactly the steps in this video. I'm Victor Snow from Trading from the Soul, where smart money is simplified. If this video helps, like and subscribe. So the strategy involves what? Identifying what? Your first move, your second move, and what? Your third move, which is this move here. Again, your first move in a downtrend scenario, your second move, and finally your third move. This strategy won't even make sense without this next one, which is what? We always want our third move to take out our second move's range. So this is what? Our third move, right? And here is our second move, and here is our second move's range. So we want this third move to what? Take this guy out. Okay, good, it has been taken out. And the takeout could be what? Either what? A wick or a candle. Both are considered as what? A takeout. So why do we even want the takeout of our second move's range? Because of what? It shows that the bulls are in control. So one of the mistakes I see traders make with this particular strategy is what? They have their second move like this now, and what? Market comes to what? Take out this particular level, and they think it's what? A takeout. Let me tell you guys, this is so invalid. Guys, discipline is the difference between goals and what? Accomplishments. And in using this strategy every day, discipline is everything. So I want you to be patient enough to allow the trade actually take out the second move's range. Back to this example. So after this takeout now, we want what? Subsequent candles to what? Break back in. What I mean by subsequent candles is what? The next candle after the candle that took out the second move's range. And we don't want any of the subsequent candles wick to go below the breakers candles wick. Now this is what? Our breaker candle, the candle that broke this range here. And we don't want this subsequent candles wick to go below this guy. It's allowed to come down, but not just what? Go beyond it. Once it goes beyond it, it invalidates our setup. Picture this as when you open the door to your house. Rather than going in, you stay back outside. So now we have the breaker candle here, and the subsequent candle broke back in and finally came to what? Take out this level here, which invalidates our setup. So guys, this strategy is not close to complete without what? Waiting for a market structure shift at the lower time frame, guys. So after this is 4-hour time frame, after the second move's range have been taken out, we'll move towards lower time frame, 15 minutes in this scenario now. And what we want from here is what? A market structure shift. A market structure shift is what? A change in the overall direction of a market, indicating a reversal from an uptrend towards a downtrend. And it happens when price finally comes back to take out the most recent low that caused the market movement, and good, it has been taken out. And once this low is taken out, the previous lows here will be easy for us to take out. But another one that will be hard for us to take out is this particular final low here, and that is why we will be what? Taking our profit here. So once we have something like this, we'll definitely have fair value gaps lined up for us to trade from. So the question here is, which of these fair value gaps should we pick? So we're gonna be picking the most premium imbalance, the most extreme imbalance, which is this guy here. So we're gonna make our entry a little bit below here and stop loss at the most recent internal swing high. So what I mean by internal swing high is this move from here to here. We'll have what? Something like swing points, liquidity levels build up for us. It won't be actually a straight move to the downside. We'll have something like this, which after we've entered in our fair value cap, our stop loss gonna be what above this, the recent swing high that is most closest to this imbalance, and we patiently wait for market to return back to this level and take us to our take profit level. So another thing I want to point out here is what sometimes we'll see a scenario where what this is a zone we want to enter from. Rather than market coming back to this zone, it would move straight to your take profit level. So the question here is, should you still want to enter from this zone? The answer is what? No, guys, because in most case scenario, if you want to enter from here, market will what definitely take you out. Take it as people that are supposed to give you a lift to your destination have already gotten to your destination without you. So it is always a low probability setup to enter from your POI after markets didn't retest before going to your take profit level, guys. So if this video is really helping, though, give me a like and a subscribe. So this is everything we've learned in this video, the whole rules for the strategy. We're gonna bring this thing out here and take a trading example from GBP/USD, the 15 minutes time frame. So first thing we have here is wait for your first move, second move, and your third move. Our first move, the second move, and finally our third move. Next we have is wait for third move to take out the second move's range, and can you see the third move actually took it out. What we will do, we will check the first one and the second one. After this, now next thing is wait for market structure shift at the lower time frame. So after this has happened, we immediately move to the 1 minute time frame to wait for a market structure shift from the lower time frame. And where are we expecting our market structure shift? This low here now. Market structure shift have occurred, and we go ahead and check number 3. Next thing here is enter with a limit order at the most premium imbalance. So where is the most premium imbalance here? Where? Answer for me. We have this zone here, and that is why I'm gonna be making my entry from this zone here. Good, we are in the setup, and where we must stop loss the recent swing point, which is this level right here, and we check number 4 and number 5, and we're gonna be our take profit level, which is our second move, which is this particular guy now. Okay, let's see how the trade unfolds for us. Okay, we came back to retrace back up. Okay, and can you see, guys, is a full take profit for us, and it is actually a 1:2.7 risk to reward ratio. So someone watching me will ask, Vitos, what if I have something like this? After market took out this second most range, market retrace back and enter like this. Are we waiting for the market structure shift of this other low, or this low? Which one? The answer is this particular low, because of in most case scenario, market will take out this particular and continue going to the upside. So we have to patiently wait for this low to be taken out. See, most profitable traders actually use simple strategies. In fact, studies have shown that overcomplicating your trades leads to decision fatigue. So don't trade to complicate to actually trade. In fact, mastering in trading isn't about knowing everything. It is all about mastering just one thing, which is we want the move that took out the second most range, the low, to be taken out before we can enter. So another scenario we might encounter is a market actually taking out second most range, retrace back in, take out this guy, and again to the upside. So which one will we wait for the market structure shift? Is it number 1 here, number 2 here, or actually number 3? Answer for me. Let's eliminate, guys. Is it number 3? The answer is no. Is it number 2? The answer is what? Is still a no. Why is number 2 a no? Because of the second move's range was already taken out before this particular low was was formed for us. And what caused the takeout of the higher time frame, this second moves range, is actually what this particular low. We want this case scenario before we can enter from one of these imbalances. If this video is really helping though, give me a like and a subscribe. Another example of this is AUD-USD. You can see our first move, second move and third move have been formed, and we check it. And number 2, the takeout of our second moves range have occurred. And once this occurs, we will move towards the 1 minute time frame to wait for a market structure shift, and we continued going to the downside. So now, which high do we want it to be taken out before we can enter this particular trade to the upside? What's this particular high here? Okay, you see market actually took out this level, but we are not entering. We want this high to be taken out. Okay, good. Can you see we've touched this high with a wick? So should we enter? The answer is what? A brutal no. Why? What? Because of when we want the market structure shift from the lower time frame. Now 1 minute. Now we don't use the wick or candle scenario to justify a break of market structure. We use what? A candle close above this level. That's what we want. And since there are wicks here, we want a candle close above these wicks here that wicked this level here. No, so we are not paying attention to the wick, this wick here now. We are paying attention now to the wicks that wicked this particular guy here, which are this guy, a candle close above this level. So here becomes our new high to be taken out, and boom, this is what our correct market structure shift, confirming it with this candle that broke this high here, and that's a full market structure shift. So I'll go ahead and check that particular guy, and next thing is what? I'll map out my imbalance, most discounted imbalance, extreme, and my entry gonna be here. Market retreats back to my entry, and I'm in the setup. And where will my stop loss be? What? At the most recent what swing point, which is here. And our take profit level can be what? This level here. And let's see how the trade unravels for us. Okay, almost got taken out. Okay, and that is a full take profit for us, guys. So if you want to learn more about the ICT concepts, click on the playlist in front of you. If this video really helps, give me a like and a subscribe. If you can make one trick to this strategy to suit your trading style and personality, what will it be? Share your thoughts at the comment section.